G'day everyone, Greg Canavan here coming to you on a Friday afternoon. Just wanted to catch up with you quickly before the weekend with a gold market update. If you've been following this channel for a couple of months now, you know that I've been giving regular updates on gold and getting you to look out for a breakout in US dollar terms. So we got that this week and I want to run through a couple of charts just to give you an idea of where we are. Also in Aussie dollar terms, the gold price has been very strong. Yesterday hit $2,000 an ounce for the first time. So there's a lot going on in the gold market. So let's take a look at a few charts and catch up with it. All right, the first chart I've got here, obviously US dollar gold price. As you can see there, that spike occurred yesterday afternoon, or I guess last night, overnight in US trading, but a lot of that happened in the Asian markets yesterday afternoon. And that was really in response to the US Federal Reserve indicating that they're going to look to ease interest rates at the next meeting, joining the European Central Bank, and obviously the Reserve Bank of Australia is indicating lower rates as well. So central banks around the world looking to ease monetary policy again, and gold obviously likes that type of action. So you're seeing gold spike there to the highest level since 2013. I've talked about this trading range plenty of times before. This is a very, very long trading range, around about 6 years of gold being stuck between about $1,360 an ounce and about $1,100 an ounce, just going back and forth between those ranges. A breakout from that level, very, very bullish in that it's cleared into 6-year highs, always a good sign. So I think it won't be long before obviously we see $1,400 an ounce breached, and then onwards and upwards from there. Obviously there's going to be corrections. We may get a correction back below $1,360 in the next couple of days. Who knows how that'll play out? But look, I think this is a bullish move, and it's worth considering as a bullish move rather than a false breakout from here. Next chart I wanted to show you is the VanEck Vectors Gold Miners ETF. So this is really just I guess a collection of some of the world's biggest gold miners, or some of the biggest gold miners listed in the US. Clearly big spike there to the highest levels, not necessarily, obviously nowhere near the highest levels that gold has taken on, but we're at about 12-month highs there, a little bit over. And as you can see, those lines I've marked before, I think I showed this chart to you last time we did gold, made a couple of higher lows there on the chart, broken out to probably a little bit over 12-month highs there, which is a nice bullish move for the gold stocks. Next chart shows the gold juniors, not quite as bullish there, it's a little unusual. Sometimes you see the juniors moving ahead of the gold price, or moving ahead of the larger stocks as the speculators come in and try to buy up the stocks they think are going to, I guess, have the most leverage from a higher gold price. Hasn't occurred in this case, even though you've seen a big spike in the juniors overnight with that gap up there. We're still not at the highest levels for the year. So that one bears close watching. That might be it's a slight cause for concern. But in Australia, and I guess if there's any parallels here, in Australia the juniors have really struggled as well, and that reflects a few issues that have happened in the gold market. You've seen some stocks go into it, some emerging gold producers go into administration, and I think the market in general is just very wary of stocks at the smaller end. There's been a real lack of discoveries of some major gold finds, and also the development risk is quite high as well. So at the moment the market's happy to buy gold producers, the ones churning out the gold and making some very strong margins, and perhaps not yet ready to move into the junior end of the market. So really worth watching there. If we get some more moves at that end of the market, I think there's a really big opportunity there. Okay, coming back closer to home, the Aussie dollar gold price, as I said, done very, very well in the last couple of months. It's moved from around $1,800 an ounce up to $2,000 an ounce. Clearly it's overextended in the short term, so don't be surprised if we get a bit of a pullback. But once again, all-time highs, very, very bullish looking chart, and that bodes well for Aussie gold companies that are producing gold at the moment, and also those that are looking to move into the production, finding gold through exploration, all those sorts of things. Just on that, here's the S&P ASX Gold Index. Funnily enough, this is not at all-time highs. This index was at a higher level back in 2011, 2012, the last time gold peaked in US dollar terms, but still multi-year highs for this index. I guess the feature that I'd look at here, even though it's spiked very sharply, and I wouldn't be surprised to see a bit of a pullback, similar sort of spike happened in early 2016 as it was coming out of the bear market. And following that spike, you had a very short and sharp correction, and then onwards to sort of new highs into the middle of 2016. Given that this index is pretty much traded, it only recently broke out above the 2016 high. It's sort of been going sideways, correcting, consolidating for 2 years. So I think there's a bit of momentum there, and that can support higher prices for the rest of 2019. So quite bullish for Aussie gold stocks. Let's move on to silver. This has been the laggard of the precious metals. As you can see, US dollar silver price here, even though it's picked up over the last couple of weeks or month or so, formed a couple of higher lows there on the price table. It's still looking like it's really struggling to gain some momentum. You can see from the moving averages, they're sort of, not really in an uptrend, not really in a downtrend. So you really want to see US silver price break above $16 to get confident that it's going to follow gold up. I mean, it really should. Silver tends to follow gold, but it has lagged it terribly, and you can see that from this last chart I've got here. There's that green line that shows the $16 market. It really needs to get above there. If it does that, I'd be very, very bullish on silver. But right now it's lagging the gold price, and that's more of an indication that gold's moving based on, in addition to, I guess, lower interest rates, is the fear of slower economic growth that the bond market's pricing in. Silver, there's a lot of industrial and uses for silver, and it's does well in good economic times as well, but it's not moving with the monetary metals at the moment. So only concern with this whole thing is silver. If it gets above $16 an ounce in the next couple of weeks, then I'll be very positive on it, but at the moment it's just worth, I guess, keeping an eye on that one. All right, I'll leave it there for today. Thanks very much for listening, and I'll catch up with you again shortly. But just before I do go, don't forget to click on the link below. If you want a free report, click on that link. It'll take you through to a report I've written, a little bit of a report on how to pick gold stocks through their different stages of production. So if you're not a reader of Rum Rebellion, click through to that and get your report and sign up to the daily essay. All right, thanks again. I'll catch you again soon.